Good morning, beloved students. Today we are going to discuss last area of our current module, difference between money market and capital market, defects of Indian money market and the recent trends or recent development in the Indian money market. These are all the three important simple area would like to discuss here today itself. Let us see first one, that is difference between money market and capital market. In our previous videos we are discussed a meaning of money market and the meaning of capital market. We know that money market is a mechanism for short term finance, whereas capital market is an arrangement for a long term market. We are discussed the meaning and picture of money market and capital market in brief in our previous lessons. Today we would like to discuss difference between money market and capital market in detail to certain extent. As we have discussed, first one, that is duration of fund. We know money market is concerned with short term funds, whereas capital market is for long term finance. The next one, that is based on the functions. We know money market meets the short term requirements of the government and business operations, whereas capital market meets the long term requirements of the business and government. Here in capital market, mobilization of fund through lending is carried out, whereas in money market, lending and borrowing to facilitate adjustment of liquidity position. Then next important thing, that is regulation of the market. Commercial banks are closely regulated in the money market, where institutions are not much regulated in capital market. SEBI is the apex institution or regulator of capital market, and RBI, Reserve Bank of India, is the apex institutions or acting as the regulator of money market. Then based on the instruments, capital market and money markets are differ. In the central banks and commercial banks are the major institution players in the money market, but the capital market is functioning through money market and it has no direct contract with a central bank. The central banks and commercial banks are the major institutions in the money market. Investment banks, insurance, and finance house, etc., are the major institutions of capital market. Shares and debentures, etc., are deal in capital market for long term settlement, whereas in money market, instruments like bill of exchange, treasury bills, and short term government bonds are used in money market. The next one, the risk related to capital market is very high, whereas degree of risk in money market, that is comparatively less as compared with the capital market. Then investment institutions, insurance companies are the players in the capital market. Commercial banks and central banks are the players in our now next, that is triple MFS. Triple MFS means money market mutual fund. Money market mutual fund is a fund that's type of fund that invest in high quality short term debt instrument, cash or cash equivalent. Money market instruments are form of debt that mature in less than 1 year and are very liquid. There are different types of money market mutual funds. institutional money market mutual fund, retail money market mutual fund, etc. So these are the mutual fund which invest primarily in money market instruments of very high quality and very short maturity periods. So this is the meaning of money market mutual fund. Next one, that is the defects of Indian money markets. We know the development of money market and the importance of money market. For a well-developed capital market, money market is the presence of money market is an inevitable area. Even though our Indian money market is not free from defects. Let us see one by one in details. First one, that is existence of unorganized money market. We know, we are discussed in our previous lessons the unorganized money market and its operations. Unorganized money market is a market which is not organized and structured, and it is not it's not functioning under the strict preview of the Reserve Bank of India. That's the most important defects of the Indian money market is the existence of these kind of unorganized segments. In this unorganized segment of the money market, the purpose as well period are not clearly remarked or earmarked. In such a situations, these segments thrives on these characteristics, and the role of RBI in money market is very less in this unorganized market. It's a very important defects of our Indian money market. The next one, a lack of integration. We know integration means lack of integration or integration means different segment functionaries. The enactment of Banking Companies Regulation Act in 1949, the positions has changed considerably, or the role of RBI has changed considerably. RBI is now almost fully effective in this area under the provisions of RBI Act and the Banking Companies Regulation Act. So this is another important defects of Indian money market. The next one, that is disparity in interest rates or diversity in interest rate. We know we have been too many interest rates prevailed in our market at the same time, like borrowing rates of government and the lending rate of commercial banks. We have a different rates of interest prevailed in our economic system. The rate of cooperative banks, rate of financial institutions, rate of nationalized banks, and etc. are vary from bank to bank. This was basically due to the lack of mobility of fund from subsegment to another. Even though the changes in this financial sector, the different rates of interest have been quickly adjusting to changes in these bank rates. The next one, seasonal diversity. We know seasonal diversity means fluctuations or changes in based on seasons. These characteristics in the seasonal diversity means there are very wide fluctuations in the rate of interest in the money market from one period to another period based on the characteristics of situations. During this period, these changes may be based on crops or crops in the rural areas or based on the demographic variable, etc. The wide these fluctuations create problems in our money market. The next one, lack of proper bill market. We are discussed in detail the meaning and mechanism of bill market. We are facing the proper bill. We are facing a problem related to the bill market. Indian bill market is an underdeveloped one. Well organized bill market or discount market for a short-term bill is an essential for establishing an effective money market system in our country. And the last one, that is a lack of well organized banking system. We know we have a well organized banking system, even though our existing banking system is not free from defects. When we are Discussing this point, till 1969, the branch expansions was very slow. There was a tremendous effort in this direction after nationalization. Well-developed banking system is essential for our money market. So these are all the important defects of our Indian money market. While we are gone through this area, we can see n number of defects of our money market. Let us conclude by these words. Okay. Many measures are taken by RBI to remove the discussed defects in our Indian money market. N number of measures are taken by the government or RBI together in order to strengthen our Indian money market. We can see a number of important money market reforms in our India or recent trends in Indian money market. Let us see one by one. First one, development of money market instruments. We know Reserve Bank of India has placed an important, essential, vital role in the introduction of new instruments in our money markets. Various committees were recommended to develop, or particularly for financial re-engineering. The new instruments like 182 days treasury bill, longer maturity bills, dated government securities, certificate of deposits, etc. are number of these kind of newly set up instruments. Traditionally, we have 91 days treasury bill have been the main instrument used in our government of India for raising short-term funds. The investment came from commercial banks. In January 1993, the government of India introduced a system of weekly auctions, which has become quick, popular, and very important steps taken by the RBI to improve our money market instrument. The next one, reintroduction of 182 days treasury bill. We know we have 91 days treasury bill, 182 days treasury bill, which were discounted in 1992, discontinued in 1992, have been reintroduced or reinstalled from 1998 and 1999. Now Indian money market has different types of treasury bill. Examples, 14 days, 91 days, or 92 days, and 364 days or 1 year treasury bill we have. Demand for these treasury bills is no longer exclusively linked with statutory liquidity rates consideration. The next one, deregulation of interest rate. Deregulation means relaxation of interest rate. That helps bank to accustom or customize pricing of assets and liabilities, and to the need to manage the interest rate across the balance sheet. The process of this reduction of interest rate regulation starts in 1988, when Reserve Bank of India removed the ceiling of 16.5% and fixed a minimum of 16% per annum. In accordance with the recommendation of Financial Committee, that is named as Narasimham Committee, the interest rates were further deregulated. The interest rate have been almost completely, fully deregulated in 1998. Then another important reforms in our Indian money market is institutional development. Institutional development means the institutional infrastructure in government securities have been strengthened with the system of PDs, that is primary dealers, announced in 1995, and that of satellite dealers in December 1996. And again, trading, that is Securities Trading Corporation of India was established in 1994 to provide better market and quality for dated securities. And to hold short-term money market assets like treasury bill, National Stock Exchange or NSE has been an exclusive trading floor or platform for transparent and screen-based trading in all types of debt instruments. Another important reforms or trends in our Indian money market is money market mutual fund, that as we are discussed earlier. Money market mutual fund was announced in 1992 to bring within the reach of individual. These funds have been introduced by financial institutions and banks. Another one, that is permission to foreign institutional investors. We know we are discussed commercial banks and RBI are the important players in our Indian money markets. Foreign institutional investors are also allowed to operate in all dated government securities. Policies in 1998 and 99 has allowed foreign institutional investors to buy treasury bills within approved debt ceilings. These are all the important defects of noted defects in our reforms in our Indian money markets. We have a number of establishment of discount finance house of India, as another one, liquidity adjustment policy, introduction of interest rates, അതുപോലെ electronic dealing system, OTCI, strengthening the payment system through CCIL, RTGS, IMPS, etc. So these are all the many number of recent reforms taken places in our Indian money market to strengthen our financial markets. By these words, let us conclude today's video itself. Thank you to all.